Hello everyone, how's it going? In this video, we're going to talk about Palantir Technologies, trading under the ticker symbol PLTR. We're going to talk about the price action developments as of late, the recent news and developments, as well as the best course of action to take given the current circumstances. So without further ado, let's begin with today's topic. Palantir Technologies has been capturing the market's attention due to its unique data analytics solution and also because of the contact. In fact, I think a lot of people had their focus on Palantir because of the timing when Palantir went public, with a very high valuation when there was an impression that equity prices will just keep rising forever and ever and ever. The company serves both commercial enterprises and government agencies with a focus on simplifying complex problems through data-driven insights. It certainly made itself a name in the industry thanks to the public contracts that it got, and we can appreciate this entry that is in fact what set itself apart from other data analytics firms. This approach has garnered a lot of interest as it set Palantir, like I said, apart from other tech giants, stocks, and rivals. The company's reputation for innovative solutions, its ability to extract valuable insights, and also its capacity to work with gigantic public sector clients, regardless of the public opinion, are some of the things that really stirred the public discourse in the recent years. This popularity obviously came with some controversies, as data protection and privacy have become increasingly present in public debates. Now, turning to the recent price action, the stock has seen some fluctuations, alright. Over the past month, the shares have pulled back by around 13%, which contrasts a little bit with a broader market trend. So, the performance has certainly faced some challenges, and it's important to consider the company's projected earnings and the revenue growth looking ahead. The analyst's opinion in the future vary a little bit, but it's crucial to evaluate the long-term potentials alongside the short-term fluctuations. The recent development did pull Palantir out of a very long bearish trend since late 2021, almost 2 years ago. It doesn't mean that things are going to be smooth from here onwards, but at least there's reason to believe that the future is not written in advance for a continuous downward trending from here on till like a few years from now. In the recent news, Palantir filed a patent for a system that can track employee activity metrics. The software allows employers to monitor tasks performed on computer, analyze the keyboard activity, mouse clicks, and the meeting participation. This move has raised concern about privacy and trust, obviously. It does also align with Palantir's focus on data analytics to improve decision making. Now, I'll just quickly give my take on this software. For companies that focus on the end results, in other words, employees supposed to perform A, B, C, and D within a set time, within a set time frame, those people are unlikely to be using Palantir. However, for companies who are essentially conveyor belts of tasks to be done, in other words, they want to milk out as much productivity as possible, then they're more likely to use those methods. Which, by the way, speaking of like tracking the employee metrics, you can probably start doing it now, right? Without the input or the help of Palantir's platforms. You can simply put a screen recorder and tell the employee, you know what, I'm going to randomly check a random sample of you guys every once in a while. And then everyone will be on their guard. Just like restaurants expecting the Michelin inspectors. So with that being said, I don't think personally that this this software is gonna go that far in terms of revolutionizing the workplace, because already people are having employees are having a hard time pulling back their employees from remote work. You know, if you start telling them that if you want to work here, they will have to accept that their computers are key logged. Well, I mean, that's just going to be another excuse for massive turnover, right? For people who work in the real world, you must know, like, employers like these, they don't tend to keep their people. Like, they tend to have a lot of people leaving and then hire a whole bunch of like new employees in to fill up before the whole process has to rinse and repeat. So, like, this is certainly the latest news, but I don't think that it's going to change much in terms of like the overall image. So in the world of technology stocks, especially for companies like Palantir, both innovation and vulnerability are the two main axes that people look at very often. The demand for tech stocks is affected by a multitude of factors ranging from economic indicators to geopolitical tensions. The rising inflation and interest rates, the pursuit of safe havens in many countries around the world, the growing concerns about privacy, the increasing instability across the fields, so the judicial instability, geopolitical instability, economic, and so on, and also the absence of any sort of major corrections in the Nasdaq index are all aspects to consider when we want to understand what makes the tech stock price what it is, like what we see in the chart. So when inflation rises, the purchasing power of money for everyone decreases, leading to investors seeking assets that can act as a hedge against this erosion. Tech stocks like Palantir, they're known for their potential of growth and innovation, which can be seen as a way to counteract the effect of inflation because of their capacity to grow. However, this relationship isn't linear. Inflation can also lead to higher interest rate, in other words, the rent of your money when parking it somewhere, which can impact borrowing costs for companies, including the tech firms. Although I'm not really sure that Palantir is that much reliant or dependent on like accumulating more debt, because I feel like their cash flow situation has never really been a thing. And also, given that they're generating, gross margins and sometimes net margins as well, it kind of means that Palantir doesn't really get affected in that sense by the higher interest rates. However, because the rates are higher, the overall capital amount that is in the Nasdaq may decrease. And this is what kind of threatens Palantir, because it is one of the most iconic stocks, whether we like or don't, in the Nasdaq. And every time Nasdaq goes up, I would say that Palantir has a heavy tendency of going up and vice versa. Geopolitical instability and the economic uncertainties in many countries is also something else to consider. Many investors from those places are often driven to seek safe haven assets that are more resilient and secure in turbulent times. Tech stocks have been associated with, innovation and growth and high returns, but they can also be seen as higher risks during those periods of instability. So when money comes in, like when new money comes in, let's say the US equities market, they may often go to like commodities or blue chip stocks, and they can divert the capital away from the tech stocks like Palantir, which may potentially lead to a decrease in demand. So as the digitalization process continues to, enter into many aspects in our life, and increasingly so, the concerns about data privacy have become more obvious. tech companies, especially the ones dealing with data analytics and artificial intelligence like Palantir, are under increased scrutiny. And that tendency will probably keep going up. The growing awareness of data privacy issues can impact the demand for tech stocks eventually, especially knowing that, most shareholders of Palantir are retail. In fact, if you think about it, it's kind of bizarre how the retail, the ones getting surveyed, the ones getting the data analyzed, are also the ones who, for the most part, are invested into Palantir. But if you don't have nothing to hide, you don't have nothing to hide. So, you don't have to worry about a thing, right? In the meantime, the geopolitical tensions and conflicts also have some ripple effects across financial markets. The uncertainty can lead investors to seek safer options, like we've said, which may result for a reduced demand in the higher risk assets like tech stocks. But I want to add something here. It's not just a question of reduced demand. It's reduced demand comparatively to other kinds of assets. Because if the overall pool increases, everyone will get something additional, right? And this is probably why we still haven't seen the big price correction that I was expecting since 2021. Now, if we look at the whole thing, traditionally, when you have rising inflation, rising interest rate, geopolitical instabilities, growing concerns for recessions, generally speaking, that's going to cause a major collapse. But so far, NASDAQ hasn't. And the first one is that tech sector has demonstrated its capacity to seize on narratives, especially Palantir. I mean, ChatGPT came out of nowhere, and then suddenly Palantir is like, oh, by the way, I'm also in AI. Please buy my stock. This is what partially happened, and what partially... Look, I mean, in the overall growth of Palantir over the past 2-3 months, I would say 20 to 30% of that would come from that crowd. Some people legit, they don't really care about what the stock is, as long as they say, oh, I'm into AI, they're all happy for it, and they're gonna go for it. I feel like this is what we're dealing with as well. And this is also why sometimes we may see price action that kind of defies normal logic, but that they're in a logic of their own. This is kind of why. Also, I know that nowadays the interest rate is kind of high, and I know that when people renew their mortgages in a few years, if you can afford a mortgage, that is. If you cannot, then don't worry about it. But even though nowadays the interest rate is high, we've had 15 years of low interest rate environment. Meaning at some point, investors' mentality has been shaped by those 15 years. And at some point they will stop thinking oh, but what if the inflation goes back to normal? What if the equities have to actually rely on themselves and not just on Jay Powell printing new money, right? In other words, this is kind of similar to how at some point we saw the startups suddenly realizing that, oh, they have to turn a profit in order to make it. Well, I mean, isn't this just common sense? Well, apparently it wasn't. Apparently for many, many years, we were able to surf on fake money. Well, I mean, not fake money, sorry, but additional money printed and pumped into the financial system to see those stocks yielding losses, but despite of which, been able to increase in their share price. And also, there is this issue of macroeconomic backdrop, including like past and potentially present or future stimulus and supportive monetary policies that may resume if they see that things are not going the way they wish it will. So this is like the overall picture of the ocean in which Palantir is swimming. Now, I would recommend to always keep a little presence in Palantir stock, but to be very cautious about going in altogether. Because I feel like Palantir is probably going to go through another few rounds of retracement before things will get better, right? Like imagine there's going to be eventually a darkest hour, except it's not just an hour, it may be 5. So, you know, bring enough, to quote Tai Lopez, bring enough like fuel units in order to last long enough to see the prosperity coming back. You know what? Maybe prosperity in the financial market coming back. Because you know, in terms of the prosperity in the real world, some people haven't seen it for like 50 years. So yeah, you're not wrong. We're only talking about the stock market here. So yeah, that's my opinion. Keep a presence in Palantir, and you know, try to like very slowly drip in over the next 2 or 3 years. And if Palantir goes from like $15 where it is now back to 8, don't be surprised. Factor this element in. And, you know, if you buy it at 8, then you would make a quick profit when the market turns once again. Like, that's the gist of things.